Welcome to PM Express Business Edition. The banking sector, many has asked that beyond COVID, what is going to happen to it? What is going to change? In some other continents and countries, they're going into a second wave of lockdown. There is talk about work from home. What about in Ghana here? What is going to change? How are things going to look like going forward? Or today on PM Express Business Edition, you're looking at beyond banking and COVID. What will happen? What will change for depositors, for investors, and even the bankers themselves? All these things wrapped up on Business Edition PM Express as we look at beyond banking and COVID-19. What is going to happen? What is going to change? We'll take a short commercial break and we will be right back. Welcome back from the commercial break, and we're looking at banking on PM Express Business Edition. Banking and beyond COVID-19. What is going to change for a lot of us who are customers, depositors, investors, and even creditors? And what about those who are at the center of this whole banking business? Well, I am privileged to have the Managing Director of Stanbic Bank and also President of the Ghana Association of Bankers, Chief Alhassan Andani. So let me first start on the note. I know that you're now a chief right now,
That's
and
right.
also
That's right.
an MD of a commercial bank. So what is the title if we are addressing you right now? Do we do Chief Alhassan Andani, or what's the correct title?
I think so that I can transition into my chieftaincy, you just call me Chief Andani Alhassan.
That would be a better.
Absolutely, yes.
How
But I'm the Pishugulana, which is the overlord of the Pishugu traditional area within the Dagbon kingdom.
I'll try to Pishula.
Pishugulana, yeah.
How has it been for you combining these two? I know when it comes to your job, Mr. Andani doesn't play with it in terms of the banking space. Traditions and customs and norms also. How are you combining those two, sir?
Well, with the tradition, there's a very well structured structure at home, that looks after the affairs of the traditional area, and I basically will be consulted and send ideas through its process and implemented by a very well laid down structure of elders.
So does it make it more easier because it's well structured down in the village there, so that, I was looking at how to combine your commercial job and the traditions and all the rest and things. You can go to certain places, you can't go there, and there's something that are supposed to be done. That's what I'm trying to.
Yeah, I'm sure we will find a sweet spot to get it done. But for me, the objective has always been, after all these active commercial life, is to go back and serve my community. So that's a good, kind of re-entry into that space. And it's not a void. It's well structured. They will need help. They will need direction. But that's what a new leader, that's what a chief will bring. But in terms of the structures to implement it, there's a well laid out structure to implement. And you don't need to be there on a daily basis. But there are some critical events that you've got to attend. And I'm able, even in my busy life, to schedule holidays, to schedule weekends, to be able to participate in those traditional events.
Mr. Andani giving us a hint of where he'll be after his retirement.
It has to come at some stage, but as I said, I always want to go back and be relevant to my people.
I mean, for you, what do you think that in terms of as a country and our traditions and all the rest, I mean, has it given you a different perspective that, listen, we have a rich culture, we have to respect it and all the rest? Has it given you a different dimension as to how you look at life? I
think generally my life, even in my corporate life, has been governed by the very strong cultural upbringing, where people are at the center of everything that you do. So that's what the Ghanaian culture is about. That's what the chieftaincy system is about. That you're providing leadership, you're providing protection, you're providing guidance to a people whose lifestyles are all woven around the culture of the area, and you're the custodian of that. So you're supposed to live above a certain level of reproach. You have to, you're really the symbol of the pride of the people. So for me, coming from that background, that's the background that brought me up into corporate life. I always respect everybody. I mean, for me, respect for everybody within the organization is a must. Because if you don't respect the person, how do you understand his or her problems to be able to deal with it? So I think Ghana has something going for it. We had a well-structured kind of traditional system that created relationships between people, between sexes, between professions, and the chief and the system that was created controlled it. And we should not have, or I hope we haven't done so, supplanted it with the Western system, which was all very chaotic, out of Renaissance and things evolved. But hey, there's a good blend. We have to blend the two.
From tradition, let's get back to commercial space and banking. And how are you doing? I've been to this place several times. I've seen very little place at the Stambeck Heights headquarters, which you are as an MD of a bank. How is the bank managing? How are banks managing in this COVID era?
So I think COVID for us was actually the catalyst. If you look at the financial services industry over the last 10 years, especially with the entry of fintechs, with the reconfiguration of payment systems, domestic international payment systems, the role of telecom providers and fintechs, that whole comfortable zone of banking for the last 10 years has been under probably the most severe attack, forcing banks, forcing financial institutions to rethink what we truly are. So we've been investing, training, re-looking at business modules, re-looking at new skills to take us into a future where we're becoming a platform and performer with other co-creating financial services with other service providers. So in the past, the bank was almost an island. So you came to us for everything, and we gave you everything that you wanted. But now, because of technology, we now have other providers of services that probably doing it better than us, doing it cheaper than us, doing it quicker than us. At the center of all of this is our clients. We want to give you convenience, we want to give you speed, we want to give you reliability. We just want you to take financial services in your stride, so that I remember a few years ago, we were having this conversation. I said that in 5 to 10 years' time, if you said to somebody, I'm going to a bank, he asks you, where is that? Because whatever you can get in a bank, or you wanted to go to do in a bank 10 years ago, you can literally do all of that on your couch by your swimming pool, holding a smart device. And literally, the whole world is pulled together in terms of financial services by the bank onto your smart device. So that's what we're already investing in. Then COVID came in.
Your space is well structured.
Yeah.
I mean, can we make a hazard guess that you were quite prepared for some of these eventualities that would have happened in terms of the fact that less people will be there, restrictions and all those things? Or maybe, listen, every industry has indeed taken a hit.
Every industry is taking a hit. So if you look at what has happened with COVID, and even as I said before COVID, what was happening in terms of all the geopolitical, all the economic structures shifting around from China, the US, Europe, India, Africa rising. So there was a lot of fluidity. And also even the mode of production and the value chain, the logistic chains were changing. So COVID actually just gave everybody a jolt for us to sit and actually look into what this future world is like or will be like. So even those who were not prepared or who were not thinking of what the future now were now being forced by COVID to stand back and say, yes, this is the world into which I'm being driven, either as a country, as a company, as an individual. And you can see all those things, tech wars, app wars, trade wars. It wasn't created by COVID. It's only been brought to light, and the severity of it has been exposed by COVID.
Let's look at from the perspective of the industry as the organization of bankers.
Yes.
And support for businesses.
Yeah.
I knew that when you go through the Bank of Ghana report and the rest, there's talk about you've done a lot of things to support businesses.
Yeah.
I mean, from your end at the association, do you think that you have done or you've done what you're supposed to do to support businesses, to support manufacturing sector in these challenging times? Because I engage some people and they still complain that we are not feeling the support of the banks in these challenging times?
Look, our core job has always been to be the safest repository for your deposits. Our core job has been to facilitate payments, whether it's domestic payment or international payment. Our core job is to create credit, and our core job is to advise businesses. This hasn't changed. We've actually now doing it at even a much faster pace because of digital bridges that we've built to ourselves, our clients, products, and different markets and different planning horizons that you have. So to say that people, credit, for example, is a bet on the future, and the bet is several. So you have a client who has a business vision and is thinking a particular light, and you have a bank who is holding clients' deposits, and our primary responsibility is to protect these depositors and ensure that whatever we use, either our capital and or the depositors' funds to create loans, that they are safe, we can get it back. So between that and what the client expectations are, we have expanded credit. And the credit from the financial services sector in Ghana has expanded even since COVID. So people would think that we just shut down. We didn't shut down. There were critical industries, your telcos, your other service providers, were still keeping the economy running, and we continue to support them. There were even industries. There are some manufacturing firms. They simply can't turn on, turn off. So they have to keep workers, they have to keep raw materials, they have to keep receivables, and all that needed to be funded, even as they were not offloading into the market. We needed to sort of extend working capital, reposition their loans. So if you were, COVID is taking the whole year off. So if you had a repayment arrangement, you have to change that. So all that support continues to come. But money and banking is about the allocation of resources, efficient allocation of resources. And if you're going to allocate resources efficiently, naturally, those that don't meet your efficient quotient or quota will say they haven't got service. But as it is, you haven't got enough for everybody. But again, the system is so structured that there are different sectors that look after different sectors of the organization. There are different sectors in the financial services sector that looks after different segments of the economy. But I think overall, from where I sit, and I'm sure if you look at the Bank of Ghana data, you will say that we're still performing those core roles very, very well. And indeed, even as we have moved away from working in the offices, if you look at all the investment banks have made, to enable our clients sit at home and bank in the comfort of their homes. These days, I actually ask my clients, when you're going to a banking hall, what are you going there for? Can we tell you what to do so that you don't need to go there? Not that we don't want you to go there. It's still well looked after. The branches are still well looked after, but literally 85% of the things that you typically have gone into a banking hall to do, we've put investments in place to enable you access all those services in the comfort of your home, your office, your holiday park, wherever you want to be.
There was an airline that had a tagline that said that they were touching the right spot. From the association's perspective, are these credit being advanced to those right spots that would help stimulate growth? Because the projection already is that the economy is going to decline, it's going to contract. Is the association advancing credit to the right spot that would aid the recovery?
Look, if we are, and I believe we are, allocating resources efficiently, we are allocating credit to the right sectors. And there are some sectors now who don't need credit, they need accommodation. So if you take the hotels, they've taken large volumes of loans to build this infrastructure, which they were paying according to a time schedule. Because the world has shut down, if you were looking for this hotel to be paying, so the entire 2020, no bank, no financier will be expecting hotels to repay loans. No financier will be expecting an airline company to be repaying loans. Nobody will be expecting all these small traders who ply their trade on the street to be repaying loans just because their world had come to a halt. Banks have to absorb all of that. Then, of course, you have all the telcos, data, all the fintechs are flourishing. They need money, and we're giving money to them. And I was happy to look at the economic data recently, agriculture. And I've always held that with all the monetary loosening that we are seeing, if we were plowing that into local production and local consumption, the fear of causing inflation would not arise. But if there was money loosening, if we gave cedis and people then went on to buy dollars in order to import goods, then we are really creating inflation. So I was very happy to see, in spite of all the sectors contracting, agriculture was still growing.
You think that it's given us something that we've not paid particular attention to, that indeed in COVID, a lot of businesses struggled. I mean, manufacturing struggled. Even the telecom sector wasn't doing that well, but agriculture, with that little support, grew above 2%.
Yes.
What is it telling us?
It's telling us to think local, meet all our critical needs locally, and just only go external with what we can do efficiently for the rest of the world and take the minimum that we need from outside. I think we're configuring this economy, and generally most of the African countries are configuring the economy too dependent on trade. And trade as an import trade, not even export trade. So if we're literally, you look around, everything that we have here is imported from either from Europe or China. Where are you getting the FX to do that? Where are you getting the foreign currency to do that? So for me, COVID has actually come to give us a pullback to say, who said we are now not producing sanitizers? We've got sanitizers being produced with local alcohol, with a little aloe vera. People are producing it. I've seen local companies produce wipes, which were imported previously from China. So it's just a wake-up call, not only for Ghana, but indeed the rest of the world, even the juggernaut, the US. COVID has told them that, no, we can't continue like this. There'll be a lot of citizens on the street without jobs, so they're bringing back jobs. So that's what agriculture, this example of agriculture's growth must show to us, and also just our own consumption. You know, we should begin to wear these jackets that are made in Ghana. We should begin to, there are a lot of things we should do. Food, and again, just 2 weeks ago, we had a collaboration with a Chinese company to produce and export starch, ethanol out of cassava with basic equipment. And cassava grows in every part of this country, even, I said, Boku, which has the lowest rainfall, right to half a cent, you can grow cassava. So everybody in Ghana can actually export. So for me, COVID is actually a wake-up call for all of us to begin to do things locally. I've seen fintechs that are coming out with products that we from Ghana as a bank are actually exporting to other countries where our colleagues are adopting it. Ghanaian youngsters.
From the Ghana Association of Bankers' perspective in terms of credit extension since COVID began, I mean, I remember the last time we were talking about 3 billion, not the exact numbers per se, but in terms of total credit extension to the various manufacturing, pharmaceutical industries, you know, do we have any data as we speak right now?
Look, we've been pulling it consistently. The central bank has been monitoring it. I couldn't tell it top of my head, but I'm sure where we sit today, we're well over 4 billion, cedis in terms of total credit, whether it's being rearranged, new credits, existing credits that were held back, which are now being extended. It continues to flow through.
In terms of all these extensions, and then Chief and Danny, let me say, I'll be coming back to the bit about the costs and even the access as well. And which sectors are these credits being extended to? Because the complaint is that, yes, of course, the banks are extending, but the problem is whether they're getting to sectors that we can all be excited about. This is a PM Express Business Edition. We're looking at banking and beyond COVID-19. What is going to change for you as a customer, a shareholder, and even an investor? We'll take a break and we'll be right back. Welcome back to PM Express Business Edition as we look at banking beyond COVID-19. What is going to change for you if you're a customer out there, if you're an investor, a creditor, and what about those who are working in the industry? And I'll say I'm privileged to talk to Chief Andani. He is the Managing Director of Stanbic Bank and also President of the Ghana Association of Bankers. I hope those who ask me why I'm calling Chief, well, he's the Chief of a strong village in the Northern region. Thank you, sir, for having time for us, and as we try to continue on this discussion, we're talking about the cost of credit, and that has been one of the biggest challenges for the SME, the Joe, the plumber, that are Joman Sound, the street of Accra, that yes, the banks are willing to lend, but at what price?
Look, on the price, I'm happy to say that since COVID, interest rates have globally declined within our sector between 400 to 500 basis points. And several factors have played in here. The Bank of Ghana themselves pulled down the policy rate from 16 to around where we are now, 14. The overnight lending rates, which banks used to kind of trade among themselves, sitting around 16%, is now sitting around 14%. Ghana government's own 90-day treasury bill, which was sitting around 14-15%, is now sitting around the 13%. And these three rates is a weighted average of what we call our Ghana reference rate. That is the base rate from which we price. We've seen that rate drop from almost 17% from December before COVID, shortly before COVID, and today we're sitting around a base rate of around 14.5, 14.7%. So that's where it is. So if you had a loan that was being priced off from, let's say 20, you are now being priced off from 14. And also we have generally as an association, as an industry, also speaking to Bank of Ghana and the government, brought down rates. So if you look at the policy rate drop, and also banks themselves have brought down lending rates, I would say the cost of credit, even still in double digits, is high compared to our neighboring countries, but it has to mirror the macro situation. So with interest rates now sitting between 15 to 22%, we are moved away significantly from your 25 to 30s.
But there's some who say that these are for the prime customer. These are for the, maybe let's say the Unilevers, but the Kojo Mensah, who is at a Bosuo Kind, he has good books, he has good credit score. Would definitely not get at 14% from any bank in Accra.
No, that's not, because that Kojo Mensah will come and put money with me and say, Mr. But Danny, buy me a treasury bill, which I'll buy for him at 14%. So if I were lending to him at 14%, you know what I'm saying? So we need to be realistic. But I can say with confidence that most borrowers in this market would have seen their interest rates drop minimum between 150 to 200 basis points, so that's about 1.5 to 2 percentage point drop. And then you can even see the drop much bigger for less credit risk, because we are pricing risk, and therefore for large volume operators who manage their risk very, very well, and the bank doesn't have to expend that much effort to recover it, they're able to borrow at lower rates. But for some other industries where the risk is pretty high, and also the banks have to expend a lot more energy to assist and help them, the pricing tends to be high. It's just the way things are. But overall, we're all looking towards a macro situation where rates will still come down. I don't think we ourselves necessarily think that the rates are where they are competitively around the West Africa sub-region. But under the circumstances and from where we are coming from, you would say that the cost of credit has come down.
But do you think that it could go down further? And what are some of the, is non-performing loans still an issue here? You look at the Bank of Ghana data and it's still a big problem. And is it about service providers or the banks themselves also not doing some due diligence on whoever walks into your office? Or maybe some would say it's government that is not paying for these loans.
No, I think banks naturally have to improve their credit risk profile and also their credit governance systems to ensure that, as I said, we are allocating scarce resources, which is capital, and therefore we should be applying the best credit principles to ensure that we are giving the credit to the right entities over the right period and measuring the risks and helping those entities to mitigate the risks well. I think it's also the macro situation. Ghana government borrows, and interest rate is a market phenomenon. It's a market determinant. People would either bring money to a bank or go and buy treasury bills or invest in stock. So that kind of overall rate at which government borrows itself in the market is very, very important. So if government is still borrowing at 14% and somebody had to buy a treasury bill, or come and deposit in the bank at 10%, what do you think the person would do? So, look, the macros have improved, rates have come down. Can it still come down? Yes. But would you have any market, even the well-developed European or generally the OECD markets, where everybody borrows at the same rate? No. Because we all operate in different risk segments. And in fact, sometimes the higher the risk segment, the higher the return. So you are not just borrowing at a high interest rate, but your profit levels are also much higher than the guy borrowing at a lower interest rate, because his profit levels are not that high. So you are, even if you manage well, you are still able to pay your cost of finance plus make a significant profit. So it's a risk-reward thing, you know, and we're all managing to ensure that risks come down. Central Bank is putting all the pressure, and I know the Ghana government is also putting pressure on the Central Bank, but everything has to be in tandem. We have to be in a lockstep with everything. The policy rate, overnight rates, deposit rates, what they call it, the rate at which Ghana government borrows on T-bill, and 2-year, 3-year bond interest rates, all those feeds into a rate structure and choices people make.
You talk about the policy rate. I mean, one would ask that, so the Bank of Ghana Monetary Policy Committee is meeting right now.
Yeah.
I mean, the system or the outlook is still a little bit turbulent and all the rest. For you, do you think that they should keep the rate, or they should bring it down so that it could impact on your cost of credit, so that I can walk into your bank and get some good loan at a good rate?
I think that sometimes when we talk rates, we should always talk the real sector. The whole global economy is contracting, and governments and policymakers everywhere are finding ways to kickstart the economy, to kickstart economic activity. Capital, and to your point, affordable capital is at the core of this. So that's where we should be coming from, that if we really need to kickstart our own economy, the capital and the cost of capital must be looked at very carefully. So it's not your usual, classical economics of, you understand? You've got, I mean, the US comes out and say we're going to keep interest rate at near zero for the next 5 years. What kind of crystal ball did they look at? Because they know that they need to kickstart their economy. And most of the US borrowers will use it to buy domestic raw materials, domestic capital, domestic labor to produce for their domestic market. If we do the same thing, if we were to put in Ghana cedis at a lower interest rate, would Ghanaians use it to hire Ghanaian labor, use Ghanaian raw materials to produce Ghanaian goods, and would we consume that? If we did that, that's brilliant. But if we gave money at lower interest rates and you took it and went and bought more jackets, but you buy foreign currency, once you start to crowd a lot more money to buy foreign currency that is not available, what is going to happen? The CD rate is going to go up, then you go and bring it, you have to think of the next round of trade, so you're pricing and you're just blowing your inflation out of water. So it's about Ghana, and most countries have sat back to say we need to kickstart our economy, and therefore your cost of capital has to be managed. You know, if you don't even find a good reason to bring it down, you should not be looking to increase it.
And therefore you wish that it should come down?
I would wish that it comes down, and as I said, all the other factors that makes it come down must work in tandem. Government itself, in terms of borrowing local currency, must be borrowing at a rate that is congruent with the general interest rate aspirations of the country. But interest rates for local currency should also be very carefully watched, that you don't want to make money so cheap that we take it and we are all running after foreign currency to import goods. Then we are just cutting our nose to spite our faces. You blow out inflation, you're back to square one. In fact, not even square one. You take yourself back several years to inflation of over 20%. If inflation goes over 20%, your interest rates are back to 35%. Did you come or did you go? So it's a measure, it's a good measure, and we should be having conversations among ourselves to say, if we want to see low local currency interest rates, then we should be using that low local currency not to buy foreign exchange, but to buy local raw materials, pay local workers to generate things that we'll consume locally, or export, more importantly.
I mean, your bank is heavy in the foreign currency business. We've seen some stability on the currency front. I mean, for you, are you that excited? Or?
I'm very excited about it.
Why?
In fact, I'm excited for my clients, because my clients have been looking for some level of predictability, you know, and the rate has stayed.
And you think that is what businesses need? I mean, having that for the past 3 months, we've seen some fair stability.
Absolutely.
That is good for the market.
Even for the year.
It is good for businesses.
Even for the year.
Your own reports you put, the group put out on the currencies,
Yeah.
put the Ghana cedi way ahead.
Yes.
Compared to other currencies.
Absolutely, absolutely. And it's again, first mover. So we moved very quickly before COVID to raise our bond. The Bank of Ghana was already building strong reserves. Gold has turned around. that's sometimes a good fortune of running a diversified economy, because gold has been the star this year among all the other tradable stuff. So, and Ghana, not only were we lucky to see the gold companies investing before COVID, they invested and expanded production, and prices have gone. So the stars are aligned there. So you'd say that the FX performance this year has been good, and we are happy about that. Our customers are happy about that, and we've stayed in a range that is respectable.
I looked at the Bank of Ghana auction results, and I even looked at their quote for 75 days. We looked at other variables and even other things that you want to look at. And it's even pointing that this stability could last for a while longer. I mean, looking into the crystal ball, and even from what your group put together, is this something that for you, you're seeing the same thing as well?
We should always go back and demand, and address the fundamentals. What are the fundamentals that are bringing in the foreign currency into Ghana? And also, how do we take it out? And why do we take it out? So we've got to refocus people's minds on exports. Whatever we do, and especially as we're beginning to expand and losing local monetary policy, is to ensure things like cassava, which we can export starch and ethanol. Most of your agro processes, we can't generate a lot of foreign exchange out of that. And also there are some that are foreign currency substitutors. Why should we still be spending a lot of money on food of any kind? Of any kind. Why can't we, substitute that foreign currency that we are using to import food of any kind to producing it here? So those are the kind of things. So your demand for foreign currency must be for only critical things that gives you a multiplying earnings greater than you demanded. And therefore we can manage it. But this kind of escalator arguments where we've got to go and raise a bond to bring in foreign currency to supply, you've got to pay those loans back in foreign currency. So if you are not building a domestic capacity to generate the foreign exchange to pay the loans that you are taking into the future, again, you're just setting yourself traps into the future, which is much more. So I think the issue around, yes, we are happy about the stability in the exchange rate, but we must be addressing the fundamentals of supply of foreign exchange and demand for the foreign exchange, so we can keep that in check and responding in terms of our everyday economic activity to those measures that minimizes our demand for current foreign exchange and also optimizes our supply, bringing it in through exports.
Beyond COVID, do I see less people in the banking halls? Do I see services being made available to me on my phone and all the rest, that human interaction be lessened? Or where are we going to with banking? Because there is still some uncertainty about how I'm going to engage you if I have to walk into Stanbic Bank to do business.
Look, we don't really want you to walk into Stanbic Bank. We want you to enjoy all the financial services you want and more in the comfort of your office. We want to make everybody productive. Look, to just sit in the car or walk or do anything, you must be looking at your productivity levels. So what we're trying to do in banking right now is to cut your journey times, cut your waiting times. And I'm happy now we are not talking about people saying that they are spending 3 hours in the queue in the bank or
There's
something.
no excuse for being late for the meeting.
No. So all we're saying is that most of the things that you would have ordinarily driven to the bank through traffic or walk to the bank or stay in the queue for, we want you to be able to access that even before you leave home. You want to move cash? Click your internet banking, add beneficiaries, move cash to anybody, receive cash from anybody. You have whatever you want to. You go to an ATM, you can put it in, the ATM would check the money, deposit it for you, and ping, you see the balance. So that's what we're trying to do. And also we are working with partners. Now we are more than banks. We now want to be we want to work with partners. So for example, I want to have real estate developers on my platform. I want to have insurance companies on my platform. I want to have furniture and other service providers for home, so that if you just touch Standard Bank and you want a mortgage, we'll ask you which area you want, and you see the developers will show you different types of homes. You touch it, we're able to do some rough calculation to say whether you qualify for a mortgage, and within hours you probably have a mortgage facility. Whilst in the past it would have taken you 6 months to get to that. So we will be making life very meaningful for you beyond banking, and also you can get all of that, the comfort of your home.
But even then, isn't not for some would say the bourgeois Because I remember way back on campus, our lecturer did a research and came to realize that people connected very much to a bank because of the fiscal evidence. And even somewhere in a village called Mantimankebi, they realized that if they see that Stanbic is here, the women go back and tell their kids that their money is in the bank. And therefore, when the bank presence wasn't there, they felt disconnected with the bank. How many people, the banking populace out there, have come to appreciate that beyond COVID, I can do everything on the comfort of my phone and get the transaction done?
In fact, we want to make that connection even deeper and more. We want the market woman selling at Saviligu Market with a phone with a QR code can actually sell you yams in Saviligu Market and be confident that her money is sitting with Stanbic Bank without leaving her shop. So she has a QR code on her phone. You have a QR code, you bought yam, it's 20 cedis, you connect, PIM, and her money is sitting in the bank. She gets an SMS message. What could you be? In fact, it's no longer her now taking your 20 cedis or you go to a Stanbic in Saviligu to take 20 cedis to come and pay her, and she goes back to Stanbic. No. We've worked with partners on her smartphone. She has a QR code, which has almost become a point of sales device. So yours, and then, it connected. Your account will be debited in, say, EcoBank. Her account will be credited in Stanbic Bank. There at the Saviligu Market. What more confidence you need?
SPM Express Business Edition, beyond banking beyond COVID-19. What is going to change? I'm looking at the costs of this as well, because it won't come easy investing in this, protecting the system, and even other partners like the telecom sector as well, supporting this new way of banking. When we come back from the break, it's PM Express Business Edition. We take a short break and we'll be right back. Welcome back to PM Express Business Edition as we look at banking and beyond COVID-19. What is going to change for me? We're talking about working from home, doing business in your car, but at what cost, Mr. Ndani? I know the bank also have to invest in a lot of systems. Who is going to take care of that extra investment? Is it me, the consumer, or the bank will absorb it, or your creditors will take that money?
No, we're changing the business model. So the cost structures that run the old business model would fall away, and new cost structures would come to run the new business module. So for example, the large spaces that we needed at high rentals to do that, they'll be gone. And I now need softwares and stuff like that for you to, and also because of financial inclusion, the sheer numbers of individuals, SMEs, and companies that will be banking, there will be just a lot over which you can spread your fixed cost. So we expect the cost to serve to drop. We actually expect.
Interesting.
Yes, we actually expect the cost to serve to drop.
Being heavy on fintechs or technology, the cost is going to go down.
Yes, because whatever you invest, and we don't need, I'm not saying there are gizmos, and also the rate of change is very high. So the rate at which you scrape off things to replace with new is high. Okay, but the financial inclusion. So let's say after how many years? Almost 20 years in Ghana, Stanbic has about 500,000 customers. Now, if we go with fintechs, in a matter of months, we probably will have 5 million customers. So the base over which you spread your cost is growing bigger. So the unit per base, is the cost per unit is lower. So we expect to see financial service costs come down. More, not because we're not going to invest more, we will invest more, but because of financial inclusion, and also because of the death of financial services. In the past, there was the death of financial services, what we call a cross-sell, was very low. But now, cross-sell would be to say, we have, let's say, 20 personal products. Some people went away with just 2, maybe a current account and a savings account. But now, because of making it available at the click of your finger or swipe of your finger, you can now have probably 10 of our personal products instead of 2 previously. So the death of financial service usage would increase, the number of people using it would increase, the cost will be spread over a larger number of transactions and larger number of clients, so the cost to serve will come down.
Isn't that interesting on that, those projections? But let's look
at
at the people and the people and the personnel here.
Yeah.
There are some out there in this industry that are worried about, as you look at beyond COVID, that if, for instance, you had about 10 persons in the banking hall or branch, and because of being heavy on fintechs, what is going to happen to those people?
We are retraining people. And look, we can't run away from the fact that the new world requires new skills. And we have to tell everybody that the new world requires new skills. Not lose jobs unless you're not prepared to train for the new skills. And also, look, there is a lot of entrepreneurial skills coming up. The bank will still, for those that are not prepared to learn the new skills, and already, if I take you through the kind of investment Standard Bank has made to enable our staff across all of our geographies to learn. So we have something we call My Learning, and this is just a bit of Standard Bank. You are connected to the likes of Harvard. You are connected to the likes of Salesforce. You are connected to a whole global array of training institutions that you never had before. And you can connect and learn even whilst you're on your bed, whilst you're on holiday. You understand? So we're giving people the ability to learn the new skills for the new skills. I mean, I keep telling my colleagues, if I have to apply for a job today in Standard Bank, I probably won't get that job unless I can prove that I have the aptitude or already have got some new skills that can make me functional in the new world. So actually, my encouragement to all of them, and we're encouraging all of our staff to retrain for the new skills. And why not, really? If you look at banking 50 years ago, the skills we have today, is it the skills our forebears had? So let's be realistic, that we're transitioning from all these brick and mortar touch businesses to more digital. What do you need for digital? More insights. We want to surprise you. Before, when we just touch you and you tell health, we know what your health requirements are. We know who's your preferred medical provider. We know who your medical insurer is. We know that's insights. And we need people to be able, we don't want somebody coming to say, oh, by George, no. We know your age, we know your health status, we know who your medical service provider, we know who is your health insurance provider. We have a lot of information. And that information is shared with your service providers. So before you go, your hospital bills are paid, your laboratory examinations are done. So it's more of a new set of person to be able to give you that level of insight and service and free you up to do other things.
So it's more redeployment than asking people to go home because of this. No. We, Standard Bank, we're going through this, and our group's CEO, and I've said to my team here, is not about retrenchment, not at all. It's about reconfiguring our business for the future. We call it future fit banking, financial services. And we have lots of opportunities for people to train to get to those new skills. And for those who just think they want to go and do other things, they'll be supported to do so. But we don't see deliberate job losses because of it. And then what about the external systems also supporting this new way of banking in terms of internet, data, call, and even a well-protected system as well? I know the firewalls the banks always want to build. I remember I had a friend who once was asked to send a mail and said, George, I can't do this thing outside the bank because of protection they're supposed to have and all the rest. And I'm saying that are the systems right to support this new way of banking in terms of a secured platform, a reliable data, so that a customer won't go and stand behind ATM, that in a remote ATM, and be complaining that I cannot access my account. And recently, there was a big bank in the industry that had a serious technology problem with their platforms. And there are people who were ranting, and I know people who are well educated said, George, I wouldn't do mobile banking. I won't, because I don't trust these remote systems. That is a big challenge for you in going this new way.
In fact, I must say that what is actually accelerating this change is not us. It's exactly the systems that you're just spoken about. So how come that if you hit Google every time, has Google ever failed you?
Oh.
No. Has WhatsApp, if you get up and you touch WhatsApp, has it failed you before?
Really?
No. So there are a whole lot of these systems that people interact with, which have never failed them. So we are sitting down and saying, why should we be locked in our little offices, and why don't we go and partner with those guys? So if you were to touch WhatsApp, there will be something that drops on Standard Bank. And the engine they run is what has encouraged us to go that route. So that engine never fails you. Google's engine would never fail you. Amazon Web Services never fails you. So because of those, the reliability of the new carriers, the new channels, that is what is encouraging us literally to disgorge ourselves out of these ancient traps that we call branches and or offices onto those platforms, and to then tell our clients, and also the richness of the data that is sitting in there can give us better insights to serve you. Mm-hmm. So in fact, the banks are really catching up, because the platforms that makes it reliable is ahead of us. So for example, if my internet banking is not working, and I'm not going to sit here and say it works, it's because maybe my link into my internal link to the provider is where the weakness is coming from, not the provider to you. You get what I'm saying? Yeah. So we are now literally catching up, making sure that the pipeways that we will carry our services to those platforms that never fail, quote unquote, are reliable. We call them APIs. I mean, you don't want to go into technical jargon, but we also have to, back again, what do we bring into that world, that new world of Internet of Things? What do we banks bring in there? Look here, whatever happens, customers still trust us with their data. Customers should still trust banks. So I'm a trusted partner. I'm sure people may disagree, but largely the data shows that what we will bring. Would you rather give your information to some fintech that you don't know, or leave your information with a bank that you know, and then they can work with the fintechs to make your life easier? So the fintechs and our other service providers have invested in slick, quicker things that gives us insights, but we are trusted to be the custodians of and we're still regulated, heavily regulated, so you can feel and touch us. But the way we reach out to you is using these pipes.
It's interesting spoken about trust. There was a recent Bank of Ghana report that highlighted fraud cases in the industry. Yeah. And for some people, they were worried that it turned out that majority of those fraud cases were perpetrated by internal banking staff. When I hear some of these reports, I think twice when I'm engaging a banking client or an executive for my bank.
Yeah, no, I think it's quite, you are right to think like that, but always put things in perspective. We catch those people. I mean, our internal control systems, they're quite tough, and somebody can breach it, but it doesn't take long, we'll catch you. And the scale and the security we give you, we would never tell you that, oh, because somebody lost us money, your deposit is impacted. No, or your loan cannot be disbursed. No. So the core things that we do would remain, protected. Look, you have to have a cyber crime of a gigantic nature to bring down a bank or individual to bring down, but the controls are there. And it's not only banks that work with human beings. People in government work with human beings. People in companies work with human beings. And the human being, that's why we all have the churches and the mosques to keep us in straight lines.
Do you think you're doing enough to bring about confidence in the banking population? That listen, we are naming and shaming, we are dealing with this internal stuff, we are reporting these things to the Bank of Ghana ourselves.
We are reporting it to the Bank of Ghana, and I'm sure if you need a confirmation of that, it's a requirement that if you dismiss a member of staff, you report that to the Bank of Ghana. And also the Bank of Ghana keeps a data that if you're engaging any new member of staff, you go back to them to check whether this individual is sitting on the blacklisted data, in terms of having previously committed some financial crime. We're required to do all of that. We probably should also be looking to automate it. So it's like sanctions list. So you have thousands and millions of people on sanctions list, and it's automated. So we should be getting to a point where all these undesirable people and their credentials are automated. So if I click XYZ that I want to employ, I should go through a spool very quickly that says that throws up that, oh, this person was picked up here, and this was it.
That is for the industry.
For the industry,
yeah.
yes.
But for you, you think that you should, are you worried that maybe some would say that this could hit confidence in the industry, or you don't think that this is?
No, I think sometimes it's probably, it's something that concerns us, and for us, a loss of one cedi is a lot too much. And we take it very seriously, because it's just a zero tolerance. But I'm saying you are working with human institutions. But in terms of the sanctity of the job we do, it's largely 99.99% safe, except where the one-off catastrophic event of, we've seen banks fail, Indonesia, some cyber hackers, and that's a new skill people have, which everybody's running to catch up on. But individual bank staff perpetrating fraud, I mean, we catch them, we punish them. But if you say name and shame, I won't come out every day on the graphic or Joy FM to say I've dismissed XYZ. The person still has legal rights, and the costs are quite complicated.
There was a recent lead U.S. Department report that again talked about some big global banks helping criminals to move monies around. I mean, again, reports like this, and I agree about you having the systems in place to report them. Maybe some will say that it still hits the confidence button.
If you read that report very carefully, those were reported by compliance officers in the banks themselves. So I have a compliance officer here who, even though administratively I pay her salaries, reports to the to the regulator, cannot hide me, cannot hide the system. So it's the banks themselves and the regulatory environment sets us up to self-regulate. So my head of compliance does not need, if they find something untoward, come to me. They go straight to regulator. But the bank that they are reporting on is the one that pays, because you want it to be corrected, and we respect each other. So I agree that that was very troubling, and it's about compliance. And also sometimes the things that banks get accused most is when we try to hold compliance to 100%. So you've come to open an account. I want to drill down to know who is this person. You open an account and I want to know who is the beneficial owner of the account. And they'll go back to JIPC and say you're not supporting foreign investors because you're asking too many questions. It's because of this.
So then finally, as we also push the button of lend, I mean, are the banks looking at the ability of Joe Mensah to pay, because you're also watching the non-performing loans as well in these COVID times. I'm asking that these monies might go out. There are some people who might not be able to pay. Is that a concern for you, sir?
Absolutely. As I said, the loan is a bet on the future, and you better get all those bets right. I'm giving the loan to the company, to the individual, believing the story, interrogating the story, and putting mitigants. And I've got to make sure I stay on the ball for it to happen. If it doesn't happen, I'm in trouble. So, number one, to pay, and in fact, that is the biggest pain borrowers have from us, is us banks, financial institutions, drilling down to ensure that whatever well laid out plans you think you have can actually stand the test of time. And also risks that you haven't seen. So you want to produce this item at this price. You're not, and you are sure of your technology, but you're not sure what is happening in the next laboratory. So just when you've taken off, some new product comes out, same product, half your price. So me and you are in trouble. So those are the kind of things that we look at: industrial analysis, technology, reliability, market, shifts in taste, all those things we have to do. But we can only do the best we can, monitor it, and pray that we make more good loans than we lose. But for a bank to say they don't never lose money, then you're not banking. Because that's where the risk spread is.
Well, all too soon we have to draw the curtain down on PM Express Business Edition, Banking Beyond COVID-19. Well, we believe that we've all been enlightened about what will change in terms of the cost to us as individuals, depositors, and those who are at the center of this whole banking business. Chief Alhassan, and then that's the one I can pronounce. So I think I'll go with that one without doing the traditional name stuff.
Otherwise, you come out with a ram.
I'll try if I can afford it. Maybe if I can't, I'll look at other means to finance it. But also, you have to draw the curtain down on Business Edition PM Express. So happy to have Mr. Ndani, Chief Ndani, with us to explain some of these things with us. But I hope the debates and education will still go on in our homes in terms of what will change for us and how prepared are we as consumers, depositors, creditors, and even financiers. This is PM Express Business Edition. My name is George Yafe. Have a great day.